The alchemy of fear, gold, crypto, and the elite's controlled wealth cycle. In the theater of global finance, gold has always been cast as the ancient talisman against uncertainty, a refuge for the fearful and a vault for the prudent. Yet, behind the shimmering curtain, this safe haven is less a sanctuary than a hunting ground, where the public's panic becomes the raw material for the enrichment of a select few. The last few years have offered a pristine example of how fear can be engineered, magnified, and monetized, a masterclass in manipulation that Niccolò Machiavelli himself would recognize as the art of ruling through perception. Gold's manufactured sanctity. Gold's mythology is not accidental. It is cultivated. Generations have been trained to see gold as the immutable refuge in storms of war, inflation, and political upheaval. The mechanism is simple. Media orchestration ensures that every tremor in geopolitics is amplified into an existential threat. Central bank policy, through rate manipulation and money printing, sows distrust in currencies, driving capital toward gold. Historical conditioning keeps the memory of gold's survival through empire collapses alive, reinforcing the reflex to hoard it. Yet, here lies the Machiavellian twist. The same powers that own the largest gold reserves are often the authors, financiers, or accelerators of the very crises that send the public scurrying to buy gold at inflated prices. 2. The price is not the price. To the naive, gold's value rests in its physical scarcity. To the initiated, the true battlefield is in the paper gold markets, the shadow arena where futures, derivatives, and lending agreements dictate the price far more than mine output or jewelry demand. COMEX and LBMA futures trade claims to gold in volumes hundreds of times greater than what actually exists. Naked shorting allows the price to be smashed in hours, forcing out weak hands, only for insiders to buy back at a discount. Central bank leasing lets bullion quietly move into private hands or be dumped to depress prices, later reversed to create spikes. Here, the rules are simple. Control the market mechanism, and you control perception. And once you control perception, you control value itself. 3. Crypto, the new gold in digital clothes. The cryptocurrency market was sold as a rebellion against centralized control, digital gold, immune to manipulation. In reality, it is the same game in a new costume. A handful of whales control the majority of supply and major coins. Market shocks, whether regulatory threats, exchange collapses, or media hype, are orchestrated triggers for fear and greed. Pump and dump cycles mimic the gold market's historical patterns, with price peaks designed to entice the masses and crashes designed to strip them of their holdings. Gold and crypto share the same exploitable trait. They are both highly sensitive to perceived risk, and perception is the easiest commodity for the elite to manufacture. 4. The Rothschild continuity. The Rothschild name has been entwined with gold for centuries. Their influence, once overt through N.M. Rothschild and Sons and the London Gold Fix, is now discreet, woven through private equity, mining conglomerates, and off-market bullion vaults. While they publicly retreated from some direct dealings, their footprint never vanished. They simply moved into positions invisible to public scrutiny, ensuring that when gold prices doubled in recent years, their vast holdings appreciated without the need for speculation. This is not gambling. It is ownership, the surest form of profit. The fear machine in motion. The past years were a masterpiece of crisis sequencing. Pandemic, economic shutdown, gold rush. Ukraine war, commodity shock, inflation panic. Bank collapses, distrust in fiat currencies. Middle East instability, geopolitical risk premium. Each event drove capital into gold and crypto. Each event was amplified by media outlets, many under the influence, if not control, of the same circles profiting from the surges. 6. The true market, a choreographed illusion. Strip away the rhetoric of free markets, and the pattern emerges. Engineer or amplify fear. Guide the herd toward safe assets already dominated by insiders. Use paper markets to manage short-term volatility for maximum extraction. Occasionally crash prices to acquire more from the panicked. This is not a market. It is a cycle of controlled wealth transfer, a financial feudalism where the public are peasants working the land of perception and the lords harvest the gold. If Machiavelli were alive today, he might remind us, men are driven less by reality than by the appearance of reality, and he who commands appearance commands the world. In the gold and crypto markets, appearance is everything, and its masters are few.